Hi, everyone. Thanks for joining us today on a fine Wednesday afternoon. Today we have a special guest that was with us last month, Dr. Jack Muscat. Nice to see you again. Thanks for
Likewise,
joining
nice to
us.
see you.
Hi, Jack.
Hi, Jeff. Hi, Sunny. How you doing?
Good. So, Jack, when we spoke last month, it was a popular discussion because it was so much different than what we normally do. Normally, Sunny and I will talk about a market idea or a stock, but we don't talk about psychology very often. And it's so important when you're buying and selling stocks. So, why don't you give us a recap of what our discussion entailed last month?
Sure. Happy to. And I think it'll be really interesting to talk about it in light of how people feel about who won last night's debate, because that'll be a real example of what cognitive biases are like. So there are many cognitive biases, which are basically things that we think about really unconsciously that focus our behavior. And the three that I focused on in terms of investors are the endowment effect, which is simply that when you own something, you feel you've got some special relationship with it. You may not want to sell it, you may want to keep it. And so the success that occurs if the stock goes up, you think you did it. So that's the I own it. I own all the success. The attribution error was the second one I talked about, that when things don't go well, you have other people to blame. So the attribution error was, I got bad advice, or I should have done it this way, or somebody else got in my way. And we sometimes, as we all know, we attribute positive attributes to ourselves and negative attributes to others and don't see them. And then the third one, which I think is really important in terms of your investment philosophy and what we want to do when we're investing, is the loss aversion.
Mm,
And loss aversion is really around fear. And we're hardwired that the fear response is 9 times stronger than the greed response or the desire to make money. It's more the fear of losing money. And so we have to overcome that loss aversion. And three things that happen there are what I call an analysis paralysis, which we all do. We can't make the decision. We're afraid of making the wrong decision. We try to do too much research. We don't really have a way of or a methodology of making that decision. The second problem is the opposite. It's what I would call over trading, where we keep trying to get that last 5% or that last 2%, fearing that we're going to, lose out. And then that causes tunnel vision,
mhm.
and tunnel vision is simply where you miss the big picture. So it was interesting for all of us who are watching today or in the future, the very different responses people made for the uh, election debate last night with Trump and Harris. And we're not going to resolve it because people who think Trump won have their reasons, and people who think Kamala won have their reasons. But the main thing to think about is winning in November,
Mhm.
and that's what we need to focus on. So I think that one of the things that we want to be looking at is how do we overcome our biases? How do we become aware of them? And then what are the tools we can use to overcome them so that we're not moved by emotion one way or the other,
Right.
and not knowing how to make that decision. And that got me thinking about something you and I had talked about, Jeff, and that was, using technical analysis, which
Yeah.
is the discipline in which I would call the buffer to irrational exuberance. Like, how do we deal with all our emotions? How do we make sense of them and create a path to success that is based on rational thought and on good predictions and good methodology.
Yeah. When I started my career, Jack, I spent all of my time on pure fundamental analysis. So researching the company, understanding the numbers, what their business plan was. And I spent early on no time on technicals, which we should just define as looking for patterns in the charts. And later on, someone told me it's important to look at technicals because other people look at it, which is somewhat of a reason, but as I have progressed, I've realized technical analysis is really psychology, and it's incredibly important. The best example I could give is, let's say a bunch of people bought a stock, or here's a good example. Sunny and I recently looked at Intel, It was forming a
Mhm.
base around $30 a share. We didn't buy it, thank God, but if a lot of people did, and then they missed an earnings call or an earnings number, stock dropped. It's now below 20. If that stock ever gets to 30, you're going to have all these sellers who said, "Oh my God, I bought at 30. I lost $10 a share," and they just want to make their money back, don't they? And so that's where psychology comes in. But that chart I just mentioned has nothing to do with fundamental analysis, but it's incredibly important to the price of the stock.
Right. And I think the other thing with fundamentals is you can look at a company and like it, but when do you buy it and when do you sell it? I was just
Right.
reading your most recent newsletter on Aecon, which, from my perspective, it's one of Canada's largest infrastructure development companies, and you would think, given all the problems it's had, and you outline them, that it would not be a good buy because it's has some problems with profitability, cost overruns,
Yeah.
etc. But you looked at the pricing of which to buy it,
Right.
and people, um, the the discipline that you put on it is okay. So what is going to happen? Are we not going to need pipelines? Are we not going to need the LRT, which will eventually open? Are we not going to need the infrastructure? Of course, we're going to need that. The behavior is really looking at, and this is where I think you talk about what what price people buy. So people will buy something. We've talked a lot about Tesla. I still don't know if they're going to make any money from cars, but the stock has its
Yeah.
own, it has its own life. But I'm always feeling that the news, I'm either too early with the news or
Yeah.
I'm too late.
Right.
And that is the undisciplined approach. That's where I'm just reading, you know, uh, sales are down. Oh, I better sell, as opposed to how do we take those fundamentals and look at what people's behavior is? So what
Right.
becomes a ceiling becomes a floor
Yeah.
in pricing. And
Right.
that's very psychologically profound around anchoring in a price that people want to buy something. So if you were going to buy something, at 30, but when it goes down to 30 and only goes down to 32, but you're hoping to sell it at 60,
Right.
why would you not buy it at 32?
Right. Yeah.
Because everybody else is thinking that it's going to go down to 30 because the last time. So you
Yeah.
have to be, it's that art and science that you guys do that is so interesting in looking at what the average person is thinking they're going to do in the market and then kind of be ahead, but not too far ahead, or
Right.
else you're not maximizing the opportunity on the dip or selling, which I think you also have a great discipline about is how long do we hold it?
Right.
What is a rep? And maybe you could tell us. I mean, you're interviewing me, but I'd love to interview you guys. What goes into your um, thinking around when you should take profits?
Yeah. So we follow all the news that comes out on our 25 stocks that we own for clients. We'll listen to the conference call every quarter. And after listening to that, if we think this company is on the brink of one we want to sell, we put in the reason why we would sell something. So sometimes there's price exhaustion. Sometimes we'll sell because there's resistance. The last company we sold was Hudbay Minerals, which we
Mhm.
wrote a blog on. And if you
Mm-hmm.
look at the chart longer term, you'll see there's just a lot of resistance at $11 a share. So we sold that one right at 10.55, and as of today, it's $9 and change. So I'm
And
happy
bought
about.
it, but we bought it off the fundamentals a couple
Mhm.
years ago at
Mm-hmm.
a fairly good price of 477.
Yeah,
And then looking forward, selling it a couple years later using technical analysis of a threshold, I guess, a resistance
Right.
number of 11. And we came
yeah,
in just under that. So,
yeah. Right now, for the 25 stocks we have, three of them we have a written reason why we would sell it, because either we can't foresee any future catalysts, there might be some technical resistance, um, or we might have a better idea. But if as long as there's a catalyst for the stocks that we've purchased, and we'll cite what our 5 5 or 6 reasons are. As long as those catalysts haven't been fulfilled, we'll continue to own it.
Right. But the thing about your discipline, the endowment effect, like it's one thing, we can get technical and academic about these cognitive biases, but how do they really play out in life? Basically, you can fall in love with your stock and
Yeah.
how smart you are. You bought it under 5, you're going to hold it. Now it's 10.55. Well, maybe it'll go to 12, but you got out of it because you realize, I think from an actuarial point of view or just a probability point of view, the chances of greater gains get less and less. And now let's look for another underperforming stock that we can do the
Yeah.
same run.
Yeah.
Mhm.
That's exactly what we did. Yeah.
And that's how you get rid of the endowment effect.
Right.
And the discipline then on the attribution is that, if people are funny. They won't buy it at 475 because it's too cheap, but they'll buy it at 750 and 8.
Yeah. Yeah.
Yeah.
And you saw that. So then you were able to read the chart, but it's never going to be perfect, but it's better than what people are doing randomly. And
Right.
that's why I think that the technical analysis allows you to really discipline and extract even greater value and not be beholden to what I think large portfolio managers have to deal with, where they don't have the flexibility or the agility to make those decisions in a timely way. That would be
Yeah.
my guess.
Yeah. Yeah. Absolutely. And sometimes when you're at a really large firm, you've got an investment team of 5 or 6 people, and you have to convince half of those people to vote in favor of you at your next meeting, which might not happen for a week. So, yeah, I think we have the advantage of being smaller and more flexible. We can make a decision quite quickly. But
Exactly. And
no, go ahead.
the other thing is that, for investors who are looking for the right kind of firm to invest with, everyone has their own incentives. I mean, it's once you reach a certain size, people are forced. They have quarterly reporting to make to their shareholders. They want to be able to show activity. So sometimes the activity, and you can take advantage of that because you're able to sense that in the market and where it's going.
Yeah.
Was there anything else you wanted to, like I was saying about technical analysis? I'm a psychologist. I'm not a CFA. I'm not an expert in your field. So I can say anything and you can't sue me because I'm not talking about psychology. But if I'm talking about psychology, then I'm in trouble. That's why I want to talk about finance, because that
Yeah.
way my ignorance won't penalize me. But in a serious way, though, for our viewers and listeners, I'm just thinking, it's kind of tucked away, the technical analysis. Like people look at fundamentals.
Yeah.
They say, "Oh, there are a lot of new Teslas on my street. I guess Tesla's doing well."
Yeah.
They're kind of naive observers of what's going on. But I don't want you to give away the secret sauce. But if either one of you want to just share a little bit about what you do to on the technical side to really understand. I think you said a little bit, Jeff, around looking at the charts, but there's so much to it.
Mhm.
Yeah, I mean, usually we'll buy something based on fundamentals, but the technicals give us assistance in determining where to buy it. So a lot of the ideas that come on our screen are contrarian. So we'll look for things that are washed out. So Aecon, since you mentioned it, we bought that stock. I think it was down. It's in the blog. I think it was down almost 20% the day before. So we like buying things that are out of favor. They're contrarian ideas, because rather than buying stocks at 52-week highs. Because if everybody hates an idea, it doesn't take much for buyers to come in and for that stock to appreciate. So that's where we get the buy ideas. Selling is a little more complicated, but that's where a lot of our ideas come from. And we've had a couple stocks that were so out of favor, and they've done really well for us this year. Canadian Western Bank was another one. Nobody followed
Mhm.
Canadian Western Bank. And we looked at it. The chart had moved sideways for about a decade. So we bought that one, and then National Bank recently announced they were purchasing it. So we've got a double on that one. They don't all do that, but
Mhm.
I've had better luck buying contrarian ideas than I have purchasing something at a 52-week high.
Do you have a particular sectors that you look at, or are you kind of generalists and just pick
Generalists.
any? Yeah.
We'll look at anything. We have exposure in just about every sector right now. We didn't have any real estate exposure up until a few months ago, and we bought two REITs on the expectation that rates were coming down. So we added those. So far, so good. So yeah, we'll buy any sector. We've never touched cryptocurrency, nor will we. And but anything that's publicly traded is fair game.
You want to say a little bit about crypto? Because I think it's a good example of what I would call irrational exuberance, but maybe we could look at it from, it just looks too good to be true. And from my point of view, it's it's an alternative to what we call the regulated markets. And the reason the markets were regulated is because of crypto,
Yeah, right.
things like that. So it
Yeah,
becomes a kind
yeah.
of self-fulfilling
Yeah.
prophecy.
Mhm.
Yeah, we've why don't we save that one for the next
Okay.
topic? I like that.
All right.
Okay, why don't we conclude there? So Jack,
Sure.
you'll be back next month and maybe we can talk about
Yep.
crypto and what makes it go up and down when there's nothing behind some of these. If you want to, let's call it an asset or a security, but it's not backed by anything. So what makes people buy and sell any kind of crypto asset? But why don't we leave it
Well,
there?
let's do that. That's a great topic.
Okay, you got it.
And we'll continue and have our discussion. Hopefully we'll get together in real time, the
Yeah,
three
we
of
will.
us as
Yeah,
well.
yeah,
Okay. All the
absolutely.
best.
Okay, thanks,
Take
Jack.
Thanks,
care. Bye
Jack.
now. Bye.